were the big headlines we'll be tracking for you all evening on ET Now, so stay tuned. But back to the Money Show, where we are obviously going to be continuing to dissect all those individual tax provisions that have come by in Budget 2020. And for that, I have with me Divya Baweja, partner of Deloitte India, right here in our ET Now studios. Divya, thanks so much for joining in. I suppose that one change that FM has introduced has been the tax slab, and it is something that's all pervasive. It will impact everybody, right from, a small trader to even the Prime Minister for that matter. So let's talk about this little bit of a rejig in the tax slab. Roughly by 5% plus inserted a few more slabs. However, no exemptions. And I think these are some of the most common exemptions. So I mean, honestly, everybody pays school fees. Almost everybody has an LIC, a basic LIC policy. So do you really like this new slab that has been introduced by FM Sitharaman?
So what the finance minister has done, as we all know, is that either you can go for the new slab or you go by the existing regime. And the option is that if you go with the new slab, you don't get any deduction or exemptions. Yes. But if you go with the old regime, you get all those deductions. So what is important is for a taxpayer to actually see what is more beneficial. So you'll have to do two workings now. Say, this is my old regime, this is my new regime. I see whatever is more beneficial to me and I go with that. And then I can look at it on year basis, unless I have business income, in which case I can withdraw from the scheme only once.
Okay.
Coming to your question on, whether it's important to have these savings or not, I think it varies from individual to individual. If I look at millennials now, they prefer more cash in hand. There are other people who are of higher age, they prefer more savings. But on the whole, yes, savings is an important aspect. And the expectation was that ATC will go up, but this is a different way of presenting the tax savings to individuals. Yeah.
Immediate gratification, let's put it that way. The
more
FM is saying that if you do not want to make these savings, then here you go, you will just get a little more cash in hand right now. I just hope that all our individuals use that money, in a sensible manner. Okay, so Divya, let's talk about these exemptions then that are not being allowed. Very common ones, like I said, LIC, PPF, HRA. So if you could just go through that, which are these exemptions and deductions then an individual will not be allowed to take?
So if I look at a salaried taxpayer, number one, the standard deduction will not be allowed.
Yes.
Then there were certain benefits which were available to a salaried taxpayer in the context of, say, leave travel concession or HRA. They will go away. The ATC deduction will not be allowed. So
that's another 1.5 lakh.
That's another 1.5 lakh gone. And if someone has interest on house property, which is a self-occupied house property, which was capped to 2 lakhs, that will not be allowed. So when I look at both the scenarios, though Finance Minister did talk about a saving of 78,000 rupees on a 15 lakh rupee income, but that was on that if I'm not taking any deductions. But if I were to really look at the deductions which an individual was taking, say assuming I'm taking standard deduction and my deduction on 1,50,000 ATC, then the gap reduces. And if I were to look at on a 15 lakh rupees deduction of 2 lakh rupees also on interest on house property for self-occupied, then I'm in negative. So I'm better off in the old regime compared to the new regime.
In fact, I was just reading a report somewhere. I think the finance minister said about how a majority of individuals are anyway not making the entire use of that more than almost 100 exemptions that are available. So then might as well give those individuals this option of paying a lower tax. At least they'll be saving money this way, if not, by putting in money in PPF, etc. So, Divya, just to talk then about this, like you mentioned, it's an option given to individuals. They can opt for it or they can just stick to the old regime. Of course, for business and profession, once you withdraw from it, you can do it only once.
Yes.
But let's assume, our individuals are salaried and, they are considering, moving to the new regime. What are the few things that they should consider before they make the decision that, okay, fine, I should basically, if they are sitting down with their calculations, what should they keep in mind, when calculating their savings?
So what they need to do is first they need to calculate the taxes as is, which is in the existing regime.
Yeah.
When they take all the deductions, then they have to see what taxes they would pay under the proposed regime where there are no deductions but you get benefit of the slabs. Compare the two and then take a call whether I want to go with the existing regime or the proposed regime.
Okay.
And as I said earlier, if suppose someone has a home loan deduction and he has other benefits, then he may be better off in the existing regime than the proposed regime. So one would really need to do a cost-benefit analysis between both the regimes and then take a call which one to opt for.
Okay, all right. So essentially, sit down with your income, the deductions, calculated as per old regime, or let's just call it the existing regime.
Yeah.
And then, of course, compare it with what this new regime could offer without any deductions and see where you're saving the most. And I think, suppose if you have a home loan, then it's mostly going to be the old regime that you will still be better off staying in, or the existing regime that you will be better off staying in. Okay, the other part that I want to talk about is the changes in the residency laws, essentially for NRIs. And what FM Sitharaman said is that, look, you can no longer just manipulate your days of visit in India, because I know what you're doing. I have my eye on you, and don't try to evade paying taxes in India by managing or manipulating your stay. So let's talk a bit about that. That clause, and then of course in my subsequent questions I'll talk to you about the change in the days as well. But yeah, more importantly, for all our NRIs watching, what's this new change she's brought about? I mean, if I'm an NRI living in a tax haven, you could call it that, as Dubai maybe, or even for that matter, London, or Singapore, how will it impact me? What incomes of mine will be taxable and what will not be?
So first of all, this new change in the residency provision will attract only if a person is not taxed in any other country where he is residing by way of tax or domicile. So if anyone is staying in Singapore or London where they're already paying taxes, then they don't have to worry about it. But if someone is staying in a country where you are not paying tax at all, and you plan your stay in a manner that you don't end up being tax resident anywhere or end up not paying taxes anywhere, then being an Indian citizen, you will get taxed in India. That is the broad change that she has brought about. So if people who are staying in countries where they're already paying taxes, they don't have a reason to worry.
Okay.
And for Middle East also, she did come out with a clarification. The Finance Ministry came out that it is not to be worried about if you are already there by virtue of a domicile being there. So one would really need to look at the treaties also to determine whether you are a resident of which country. So that is what they are aiming at.
You mean the DTAs, the
DTA,
double
yes.
taxation? Yeah. Okay.
So the primary objective is for people who are not paying taxes anywhere by virtue of planning their stay to avoid taxes. Those are the people who will get caught in this and they become a resident in India.
Okay, all right. So it'll depend on a case-to-case basis. But let's say if I have to ask you a very simple example, Divya, I live maybe in a Dubai or in Singapore or London or wherever. I may be having some ancestral property right here in Mumbai or in Delhi or basically in India, and that's gone on rent. Now, that rental income may not be taxable in the country that I'm staying in currently. That's abroad, because of the simple reason that the asset is not in that country. And I'm an NRI, so that will be taxable in India. Is that right?
That was anyway taxed in India.
Okay,
so that's not an issue at all.
So that is anyway subject to tax, so there's no issue.
Yeah.
Okay, all right. Now, of course, coming to the new tax regime. By the way, I want to tell our viewers as well, if you have any budget-related questions on taxations, we can help you out right here on The Money Show. So also I wanted to ask you about the new residency laws. Earlier, very simple, if you've lived in India for half the financial year, you're a resident. I think she's tweaked that bit as well, right?
So what has happened is that, so there are two changes to that. One is the change to the definition of not ordinarily resident.
Yeah.
Earlier there were two conditions. You were non-resident in 9 out of 10 years and there was a stay criteria of 729 days.
Okay.
So that stay criteria is gone. So what the law now says is that if you are non-resident in 7 out of 10 years, in the preceding 7 years, then you become a not ordinarily resident. That is one. The other category which gets impacted is people who are of Indian origin or Indian citizens who are residing overseas and they come on a visit to India. There the earlier limit was 182 days, which has been brought down to 120 days.
Okay.
So essentially someone who was working, who's been staying overseas, earlier he could come to India for 6 months. But now that 6 month window has got reduced to 120 days.
And if he stays beyond 120 days, he's a citizen.
Yes.
Then
he's a resident. You have a 60, there's another criteria of 60 and 365 days. So then you become a resident. So that window of 182 has gone down to 120. Yeah.
Okay, all right. Well, we've got one of our viewers calling in, Srinivas from Bengaluru. Hi, Srinivas. Good evening. What's the question you have on the tax regime announced in the budget?
Hi, ma'am. Good evening.
Good evening.
I like your program very much. You are one of the best hosts.
Thank you so much, Mr. Srinivas. Glad you enjoy it.
Okay, now my question is, in the new regime of, tax regime,
Yes.
in the new tax regime, I heard that around 70 deductions and exemptions are removed.
Yes.
Okay, now in all the programs of your channel, even other channel, only about 8-10 will be displayed and told by all the experts.
Yes.
Now all the 70 exemptions and deductions are not in the public domain.
Yes.
Now I have two questions regarding this. First question is, if I shift to new regime as
Yes.
a salaried person,
Yes.
can I do this shift on a yearly basis from old regime to new regime to old regime any number of times? That is my first question.
Okay.
Second question is, what happens to that maturity exemption under section 1010D? Because after 10 years or 15 years, whenever there is maturity, if the income tax people say it is not allowed, 1010D exemption is not allowed, then we will be in trouble. So I want to know what
Okay.
happens to that maturity section 1010D exemption if I am in the new regime.
If you're in the new regime. Okay, fair enough. So, Srinivas ji has a valid point. 70 exemptions, she said, are not allowed. But you know, Srinivas ji, if we'll sit to list out all the 70 exemptions, we'll have to do one episode of the Money Show only dedicated to that. Hence, we shorten it to some of the most commonly used deductions. LIC is something that almost everybody has. You know, a house rent. These are the kind of things that almost everybody has. But yes, I'm glad you've asked this specific question on section 1010D, which is on death and maturity benefits. Okay, so he has two questions. One is, how often can he switch between the old and new regime? He's salaried, like he mentioned. And of course, the 1010D maturity, will he get that deduction in the new regime?
So if you're a salaried individual, you don't have business income, you can opt every year, you can opt, which is more beneficial.
Okay.
So that
So he
answers
can
the
change
first
it
one.
every year, how many ever times he
Yes,
wants?
every
Okay.
year he can do that.
Okay.
So other is in terms of ATD. So whenever if you are in the new regime, then you don't get any of those exemptions or deductions which are available.
Okay, so even the section 1010D exemption will not be
Yeah,
allowed.
will
The
not be allowed,
maturity
yeah.
will not be allowed.
Yeah.
Okay, all right. So I hope, Srinivas ji, this will help you make your decision on whether you should shift over to the new regime or not. Even if you do shift over to the new regime, don't worry. The next financial year, you can always shift back to the old regime. Okay, we have one of our regular viewers, Mr. Japesh Thakur, joining us on the phone line. Japesh, good evening. Thank you for calling in. What's your query?
Thank you very much, ma'am, for accommodating my question, and good evening to both of you. I had
Good
two
evening.
quick queries about this particular budget.
Yes.
Now, there was a lot of celebration that, yes, DDT has been abolished.
Yes.
But what I understand is that, you know, it has been abolished for companies. It has simply migrated onto us, who are recipients of the
Dividend. Yes.
Now, what I wanted to understand is there used to be a provision that dividend is taxed only as long as an individual's dividend exceeds rupees 10 lakhs.
That's
now,
right.
Has that thing been given a quiet burial? That means if I get 100 rupees worth of dividend, even that is taxable. That is question number one.
Okay.
And secondly, if the concerned expert, since he's a tax expert, if he could slowly take us through, there is a very conflicting issue which has emerged. There is something called a withholding tax. This has something to do with TDS, I believe.
Yes.
What is it? Is the withholding tax only meant for capital gains if I sell my mutual fund units? Or is it even applicable for dividends received in mutual fund? And how exactly will this get calculated? I'll be very grateful if you could throw some light on this.
Sure. Okay. So very simple. He wants to know about the DDT. Now that it's abolished, how will it essentially move? I mean, the fact that now the shareholder or the dividend recipient will be taxed. So what about that 10 lakh rupee limit, which I think was introduced either in the last budget or the last to last budget? So has that been given a quiet burial, which means even if an individual is earning more than 10 lakh rupees, there's no need to pay that additional 10%. It just simply gets added on to his or her total income. And the second question, of course, is with respect to the TDS. Now, I think what he's mentioning is he's a little confused whether it's with respect to capital gains or if it's with respect to dividend. But now that your dividend is included in your total income, I would assume the dividend will be paid to you after cutting TDS. So if you could just elaborate on these 2 points.
So now you're right, the DTT is gone. So whatever dividend you receive will get taxable in the hands of the individual basis the slab rate in the slab in which an individual falls.
Yeah.
So that 10 lakh, 10% goes away.
Okay.
In terms of the withholding tax, then whatever is the withholding which is applicable to dividend, that will be applied by the company paying that. Yeah.
So we don't know the TDS rate yet, or the withholding tax
Whatever
rate
is the
yet.
withholding rate is there, it's prescribed in the law, so that
It's
withholding
prescribed.
rate will apply. Yeah.
Okay, so basically now when individuals like Japesh or all other viewers will get dividend, they will get it after deducting TDS.
Right.
Okay, all right. And Japesh ji, yes, if you are earning more than 10 lakh rupees as dividend, you do not need to pay that 10% extra. The entire thing is just simply added to your income, and then you have to pay tax as per your tax slab. It's just as simple as that. Okay, you know what, I just wanted to talk to you a bit more about the DDT bit, because since we are on this topic, and you know, any which ways that was going to be my next topic, the dividend distribution effective tax rate was 20.55%. And now, of course, it's going to get added to your income. So naturally, I mean, it would make sense to think like this, that if my tax slab is under 20%, I suppose I would stand to benefit, right, if the dividend is added to my income.
Yes, you're right.
So how, I mean, who would it benefit, who would it not benefit?
So
what would be the average income?
anyone who was paying tax at a higher income level,
Yeah.
they will stand to lose, because then you have to pay tax on the higher slab in which you fall. So anyone who is falling in 30% slab or 25% slab, they will stand to lose, because you have to pay tax on the higher income bracket in which you fall now.
So basically, if I'm earning above 10 lakh, I think 20%,
about 15 lakhs.
Above 15 lakh rupees, yes, now in the,
yeah.
is 30%. So that's, those are the guys that who will not like the DDT being included in the dividend being included in their income.
Or anyone who was earlier above 10 lakhs, you were paying tax at 10%. So anyone who goes above that 10% limit will fall into the higher income bracket, where the dividend is concerned.
Okay,
the
all
taxability,
right. Okay, yeah, in fact, there you have it. Those are the average tax slabs as well. So, I mean, there you go. 5 to 10 lakhs is 20.08%. So anybody earning more than 10 lakh rupees in a year.
This is the old slab.
These are the old slabs, of course. We've just considered the old slab. So roughly, if you're in the old slab or the existing slab, anybody earning more than 10 lakh rupees will not stand to benefit. And in the new slab, it's, I think, 15 lakh rupees.
Yeah.
That's
that's when 30% or even 25% is above 12.5. So
yeah, 12.5 basically. Yeah. Okay. All right. We've got Shankar joining us on the phone line as well on a clarification that he requires on the budget. Shankar, good evening. What's your query?
Yeah, madam.
जी.
मेरा प्रेजेंट टू टैक्सेशन के हिसाब में 6% रेट रहता है. हाँ मैडम
जी
सुन रहे हैं ना?
जी जी बोलिए.
हाँ 6% प्रेजेंट टू टैक्स के लिए 6% टर्नओवर में देना पड़ता है. ऑप्शन टर्नओवर फॉर्मूला क्या है वो बताना चाहता हूँ. ऑप्शन टर्नओवर कैसे कैलकुलेट करते हैं? प्रीमियम रिसीव्ड माइनस प्रीमियम पेड.
अच्छा शंकर जी, आई वुड रिक्वेस्ट यू कि आप ये क्वेश्चन हमारे कल के शो के लिए रखें, क्योंकि हम टैक्स का पूरा डिस्कशन, नॉट जस्ट बजट, अभी हम सिर्फ बजट रिलेटेड क्वेश्चन पूछ रहे हैं. या तो हम आप ईमेल भी कर सकते हैं themoneyshow@etnow.tv, एंड आई प्रॉमिस आपका क्वेश्चन हम डेफिनेटली आंसर कर लेंगे ओवर द नेक्स्ट 2 to 3 odd days. Okay, well, on that note, Divya, we're out of time, so we will wrap it up. Thanks so much for joining us on this edition of The Money Show and helping out all our viewers as well with all their queries. And yes, folks, there you have it. That's the new income tax regime for you. You need to take a decision based on your exemptions, based on your current deductions, whether the new regime would be beneficial for you or the existing one.